to see such a large and crowd discussing networking. This is the first event we've had this year, and I'm really excited to be here in Splash. It's our first time here, and so far I feel like this space has excellent energy, and I'm liking it a lot. I'm just going to take 2 seconds to give to Peter a minute to talk about Splash, our host tonight.
Hi everybody, thank you for coming out. We are Splash. You can find us online at splash.ether.camp. And what we do is provide event marketing software for whether you need to drive your sales and revenue, you need to gain intelligence from your attendees, or you just need a better solution for your workflow if you need to scale up. And so that's what we really try to do, provide easy solutions for design, data needs, and scalability. So once again, you can find us at splash.ether.camp, and we are an event marketing software. And I'll give it back to you.
Thanks, Peter. Thanks to Splash for having us tonight. It's always a very difficult challenge to find a location in Manhattan that's free. So I don't have to charge admission to all of you to show up tonight and see these wonderful events we have. So there's a lot of energy and excitement, I think, in 2017 building for Ethereum. I think we went from 2016 with lots of proofs of concept into this year where we're going to start to see production applications. One in particular we have here tonight is Etherisc. At Devcon 2 in Shanghai, they demonstrated kind of a proof of concept insurance application. And tonight they're going to show kind of the evolution of that and where they're headed. I'm going to pass it over to them now. I think they'll introduce themselves.
Yes. Hello. Thank you. It's great to be here. My name is Stephan Karpischek, and this is Christoph Mussenbrock, and together we are Etherisc. And thank you very much, Michael, for putting this together on very short notice, and thank you all for coming. It's great to present Etherisc, and we actually don't want to talk that much. It should not only be us talking. Yeah? We want to talk with you guys and want to get into a discussion. So I think we just give a brief overview of what we have done so far, without going into too much detail. Just to adjust to the audience a bit, can you give me please a show of hands, who of you here is interested in the technical details of how it's working and how our architecture looks like? Alright, okay. And who of you is not at all interested in technical stuff and just goes more for business and strategy side? Alright, thank you very much. So we can adjust to that, yeah? Very good. Alright, Etherisc started out last year in July, August, just in advance of Devcon 2, the Ethereum developer conference in Shanghai. And Christoph and I got together and wanted to show off the benefits of blockchain for insurance. And can you just click me through the slides? I guess this crowd is familiar with Ethereum and blockchain, so I don't have to preach to the converted here and tell you how great decentralization is. But maybe I lose a few words about insurance. So what is insurance? What is the function of insurance? I think any decent modern economy needs insurance. Insurance is about sharing risk. You want to manage risks that you can't handle yourself. You want to buy a policy somewhere and basically get rid of those risks. So insurance has a fundamental role in any economic system, and we believe that in this upcoming decentralized economic system, insurance is heavily needed. Should I change my? All right. Sorry.
Is it better now?
I can hear you.
Should I start again? Or Very good. Okay, so we believe that blockchain can enable insurance processes which are much, much more efficient than traditional processes. And to show this, we needed something that is very tangible and that is where people can relate to and which makes people experience the benefits of blockchain. And that's why we did Flight Delay. This is our first product that we developed, and it's very easy to use. You basically go to the website ftt.etherisc.com. You need to have a browser which has an Ethereum wallet included. So we use MetaMask and can recommend MetaMask a lot. Is anyone here from the MetaMask team? No, unfortunately. Mist works too, yeah. A user selects his flight. Can we actually show the demo?
Okay.
Christoph, that would be great. Just to show you, this is not a concept. You can use it right now. This is the live version. We can select the flight, and so we select the departure airport. Let's say JFK, and I'm flying to Vienna. I'm flying on Saturday. I think Saturday. Yeah, there are no flights on Friday. Yes, exactly. So I select my flight here.
Which one?
The upper one. And then I can choose the amount of ether I want to transfer to the smart contract. So we select like 1 ether. And now I'm not sure if you can read this, but basically what happens here is we are getting the probabilities of this actual flight being delayed. We take data that's available on the web. Flightstats.com provides a commercial service for flight statistics. And we take the last 3 months of historic data. We look at this particular flight and just calculate the probability of this flight being delayed more than 15 minutes, more than 30 minutes, more than 45 minutes, and so on. And we transfer if we transfer 1 ether to the smart contract, to the insurance contract, we would get a payout of 2 ether in that case, 3 ether in that case, 6 ether in that case, and if the flight is cancelled, we would get a payout of 10 ether. Now we click on apply, and then MetaMask should come up and asks us to sign this transaction. If it takes some time, it depends a bit on the network connection. Yeah. Okay, so it will come up. A question? Go ahead.
Is there any mechanism to show an insurable interest, or could anybody decide to basically bet on whether a flight would be delayed?
Excellent question. Thank you. We will have enough time for questions afterwards, but I'm happy to jump into that. We don't check for the ticket right now. Yeah, so basically, it's a gambling site if you want. Yeah. You are betting on that flight being delayed. Okay, so we select the flight again. Saturday, exactly. Yeah. That's demo effect. Yeah? So it will work at some point in time. I think you're not connected yet, Christoph. You're not connected yet.
Ah, okay.
I don't see an address.
So
Maybe we have some troubles with the internet connection here. That's the last excuse always. Okay, let's jump back to the slides and we show it afterwards. Yeah?
Just one try.
Okay. We give it one more try to show you that it actually works. So we have an account, we have Ether in the account, now we can select the flight. I'm sorry, but now you memorize how it really works. You know? So if you need to do it yourself, then you know how.
How does the contract know what happened?
I'm sorry?
How does the contract know what happened?
How does the contract know what happened? We are sending a transaction to the contract.
Okay, so you confirm what occurred. Like, sorry, the data. So you're betting on a prediction. How
Yes.
does the contract, the Ethereum contract, know the event has like what the event was or what happened?
Okay, I see. If the flight was delayed,
the Oracle.
yes, of course. Good. We are getting into that. What we know is the arrival time, the scheduled arrival time of the flight. So basically, 15 minutes after scheduled arrival, we send one request to FlightStats, and we ask FlightStats, has the flight landed? And if it has landed, how many minutes was it delayed? And we get back that information. If the flight has not landed yet, we reschedule and ask again half an hour later. So basically, we pull that information from FlightStats.
Okay, I'm sorry, I can't.
No worries. The interesting thing is this is the last step. Yeah. So after the user hits apply and accept in the browser, this is the last step that's needed. There is no more interaction needed. We don't need to do anything. There is no insurance that needs to do anything, and the user doesn't need to do anything. Everything else from that moment in time is completely automated. And that's a big shift. Insurance calls these things parametric insurance, where you basically predefine the amount of payout you get for a certain premium, and the payout is triggered automatically based on a data stream. Go ahead.
Who's the counterparty?
There is none. That's the interesting part.
No, but how is the payout or the money?
It's a pool. It's a true mutual, if you want.
So it's mutualized.
Yes, exactly. It's a true mutual pool. Basically, everybody who insures a flight pays into the same pool, and in theory, it's a zero-sum game. So 100 people pay their premium into the pool, and you've got 15% of the flights being delayed, and those 15 flights get a payout.
And from the legal perspective, we have not yet really solved this question. You can put you on the standpoint that this contract is like a Coca-Cola automaton, yeah? You put in some money and you get something out of it, yeah? And if you ask who is the counterparty in such an automaton, then you can say who has installed the automaton, yeah? There was somebody who put the automaton in place in an underground station, for example, yeah? And if the automaton is not working correctly, then you sue the person who has installed the automaton, yeah? Then that was the classical perspective. On the blockchain, you can go on another standpoint, and you can say, nobody knows, in the extreme case, nobody knows who deployed the contract, or several people deployed the contract, and so the contract itself manages the funds. It decides whether there is a payout or how much payout there is. So you can take the standpoint that the contract itself is the counterparty, yeah? But I think this is still not yet.
So the contract has to establish some probability of a multiple of
the contract is completely autonomous.
At the same time.
Nobody interferes with the contract after you put the money.
No, I understand that, but implicit to this is the assumption that there's an ability to pay, given the mutualization, right?
Yes,
so
exactly.
If, for example, everybody bought protection against the flight being canceled, say, out of JFK tomorrow, and they were all canceled, then there's a chance that there wouldn't be enough.
Yes, exactly. That's where the reinsurance layer comes in, and we will talk about this in a second. So we can cover excess risks. We have a lot of safety checks in there. So for example, we limit the total payout per flight. So if it's a super risky flight, which would pay out a high ratio because it actually is never delayed, we would only accept a few policies. And so we have a few safety mechanisms.
Is there some level of confidence built into it?
Yes.
Some statistically.
Yes, we will come to that.
Okay, got it.
So in fact, we can show that we can have better confidence levels than Solvency II. 99.9%. No, the Solvency II is 99.5.
You're at 99.9.
Yes.
Got it. Once in 1,000 years.
We will come to this. So if you want to get into those details, I'm more than happy to discuss this. Okay, so this was our first thing. We deployed this in September for Devcon 2. We had it in production on the mainnet, making it the very first insurance contract on the Ethereum mainnet. We marketed or we announced it as for the Devcon participants. So if you were attending Devcon, you could insure your flight to Devcon and your flight out of Devcon. We had about 40 policies, a maximum risk exposure of 350 Ether. And so very small amounts, but we learned a lot. So basically it was the whole game theoretic stuff was in there. We discovered bugs. We had to do manual overrides because the contract was not working good enough, at least in our opinion. So we learned a lot about what it takes to deploy such a thing in a production environment. And then something very interesting happened. We got a lot of attention from the insurance industry. We got, I would say, 15 to 20 insurance companies calling up and asking us, what is this? Is this really insurance? Is this legal? Are you allowed to do this? How does it work? Can you give us a demo? Can you implement the same for us? And so one of the people that asked us came up with an interesting idea. Can you do the same with weather data for crop insurance? So we have a bunch of farmers in rural Africa, and we said yes, of course. We took the very same contract, 98% of the contract code is the same. We exchanged the flight stats API with a weather API, changed some of the input parameters, and voila, there is a crop insurance contract.
Do you use the weather data for the flood insurance as well?
Not yet. So in the current implementation, no. But of course, if we refine the risk model, you would use weather data, you would use airport data, you would use data about airline strikes, all those. But that's additional stuff. First, we would rather check for ownership of ticket. So, but what this shows, one more question,
Oh,
please.
sorry, I was just thinking, I was just thinking, the difference between flight insurance and crop insurance is that everyone fails in a particular region, so you need a lot more.
Yes, exactly.
A lot more people.
Yes, we need the risks are very differently distributed, I would say. So, but what this shows is, it took us about 2 or 3 days to implement the crop insurance. What this shows is that we can apply the very same model of parametric insurance to a lot of different verticals. And there is one interesting question unsolved still. How do we fund the excessive risks? That comes back to your question from before. So for the flight delay insurance, we were of course aware, you need to have an initial funding of the risk pool at some point in time, because a payout can happen, and if not enough premiums have paid in, the contract would not be able to pay out. So you need to pre-fund the risk pool. And for our demo, we did this ourselves, so it was basically our money and some friends. But of course, this does not scale. So what we did then is we used hack.ether.camp. Who of you has heard of hack.ether.camp, the virtual hackathon last year? We participated in hack.ether.camp with the idea of a decentralized insurance market, and that's what we implemented there, is a token model to fund the risk pool and the reinsurance risk pool. So basically, we have our normal risk pool, that's the flight delay contract, for example, and we have an additional pool, a reinsurance pool, which covers the excessive risks. And to fund this pool, we create a token, and we sell this token to investors. And in return for their capital that they are providing to fund the risk pool, we give them a share of the revenue that this contract generates. So from every premium we deduct a small fee. 3 to 5%. And from this fee, we can pay a good interest rate to the token holders. This model, we did some simulations on how this works and what confidence level we can reach. So how confident can we be that this model pays out? And we can reach confidence levels of higher than what traditional regulation prescribes, because we have a very low operational costs factor here. 3 to 5% from the premium is factor 10 better than traditional insurance. And we are in New York. You know Lemonade? Who knows Lemonade? Okay, very good. So Lemonade is someone here from Lemonade? Before I start talking badly about them. Okay. We actually would like to meet them. So Lemonade, what did they announce?
20%.
They are very proud of their 20% operational costs, which they claim is the best that has ever happened in insurance. And we can tell them, we had flight delay in production, 3%. And this scales. With the decentralized insurance market, we can scale this up to literally millions of dollars. Can you have the next slide? So we wrote a white paper on that with the help of a few fantastic people. Some of them are in the room. So thank you, Jake from Coin Fund. Renat is over there. So we had this idea attracted some really great minds, and together in a team of 5 or 6 people, we created a white paper. And again, this white paper got some interesting feedback from the industry, from other insurance projects on the blockchain, and we are actually quite happy about it. The next one is the social insurance. I'm sorry, questions?
Yeah, so with your reinsurance structure with paying with investors sounds a lot like a catastrophe bond. And I was wondering if you foresee any obstacles with parametric products that might pay out when the insured didn't suffer a loss and might not pay out when they did suffer a loss. Do you have any, I mean, with the flight insurance works really well, but with the crop insurance, do you have that issue?
Yes, of course. I mean, fraud is obviously always an issue with insurance, and it depends heavily on the particular risk that's being insured. Yeah. So, but that's why we use those use cases where it's very, very clear. And I think so. What we tell insurance companies is, at the moment, parametric insurance is only a tiny part of the insurance business. Yeah? It doesn't matter that much for traditional insurance. But we believe that with the wide adoption of mobile and IoT and sensors and more data streams, we will see more and more insurance verticals become parametric. One example that we have worked out for a large insurance company is life insurance. Yeah, I mean, if a person is dead or not is something that is, well, at least in modern times, it's undisputable. Yeah? So, and just imagine if there would be a data stream telling us who died last week. Yeah? We could apply the same parametric model to life insurance very, very quickly.
Would you be able to explain the process of how, in the event of a shortfall, the reinsurers would be making the contract holders whole?
Sorry, again?
So if there's a shortfall in the pool of funds from the insurance and the reinsurers have to come in, can you explain the process of how sort of the ether flows from one party to the other?
Yes. So basically what happens if the risk pool, the normal risk pool, which should be a zero-sum game under ideal circumstances, if this gets depleted by some excessive risk here, yeah, the claims are paid by the reinsurance pool directly, so the money flows directly from the reinsurance pool through to the customers, and then we refill the reinsurance pool from the normal operations after that.
So the reinsurance pool is also denominated in ether, right?
Yes.
Yes.
Okay.
So basically we sell tokens here, Yeah, and we sell tokens for Ether, and the Ether go directly in the reinsurance pool.
So, reinsurance company is a smart company.
Yeah, basically we implement what a traditional insurer has, a treasury, yeah? And the treasury manages the different funds, and we do the same, but on a smart contract. So the smart contract does this autonomously or with a minimum of manual interference.
I mean, we can discuss about the capital efficiency here, because of course this capital is locked during that time, which might not be that efficient, but we have also thought about this. Just let me go. Go ahead.
When you say capital is locked, you mean it's not being invested? Is that
At the moment, no, we don't invest it at the moment. But this is of course an option.
Is there like a delay period for withdrawing from the reinsurance pool, or can you redeem it any time?
It's a very good question. Have we? Is there a delay period for withdrawing from the reinsurance pool?
I can take that.
Yes, Jake, please.
So basically, the holder of the token is entitled to dividends. You might be able to sell back your token to the contract if there's excess, if things are going well. So there's automatic liquidity in the reinsurance pools, but it's not, it doesn't guarantee complete liquidity. What you can do is you can go to the market and sell your token.
Yeah,
it's just fully liquid all the time.
Yeah, it's a standard ERC20 token, so we can plug it into any token standard.
Actually, we are thinking of growth, so I don't think that we come in a situation where we have excessive liquid means or excessive funds, at least at the beginning. And of course, in the future, we can think of dynamically adjusting the risk fund to the risk which is lying behind it.
Okay, so we are reaching half an hour, and I learned that half an hour is the maximum that you should speak, but we answered already a lot of questions. Let me get to the social insurance, because I think that's also a good model. There was a GovHack competition. Yeah, you see, we are very much in the phase where we participate in competitions, because it's the best we can do. We participated in the United Arab Emirates (UAE) blockchain GovHack. They wanted government solutions on the blockchain, and we came up with a model for social insurance. Because it's actually a pressing problem. I heard that 70% of the global population don't have access to proper social security, and we presented a model that can scale from families to millions of people and cover a whole country and provide social security at a very low operational cost. And what is possible is basically we can have social insurance at the cost of $1 per month per person, and we can have payout rates up to 100. So we can, in the event of a serious loss, or someone is unable to work, or someone dies in the family, we could pay out up to $100. And the details are in a video. I don't want to go into the details now. What else have we got to show? Maybe we can. Yeah, that's so. Where are we going? Yeah, this is all nice and fine. We showed that we can deliver prototypes and working prototypes very quickly, and that we can deploy this in production environments. But the bigger picture here is we actually want to provide a de facto standard for insurance on the blockchain. We can abstract the patterns and the functions that are the same across all those verticals. We can abstract them out and provide something what we like to refer to as a standard model. So if you know Solidity, we want to make this very similar to the ERC20 token standard. You basically import a standard SOL file, and you can make your insurance an insured contract. You can make your contract an insured contract. And the goal is to cover really the whole value chain of insurance, from customer side to the investors, and show that it's possible to put the whole insurance system on the Ethereum blockchain today. And that's what we are currently working on. I think we have incorporated a company in the UK and one in Germany. To do that, we have a first paying customer, which is a small German insurance company, and they asked us to put one of their business processes on production processes on the Ethereum blockchain. And regulatory is a big issue, of course. So insurance is a highly regulated business. Securitization is a highly regulated activity. And so we applied for the regulatory sandbox in the UK. That's a very nice program. They basically give you freedom to move if you constrain yourself to certain thresholds. And we are preparing a token sale to fund the development of this protocol and the open standard. And we will announce some news about this soon. Next steps. Oh, we have one more. We also got some acknowledgement of what we are doing. We won some contests. Don't want to brag about this too much. This is us. Development roadmap. That's the important one. So for Q1, we want to finalize the white paper. If you have not read it yet, please read it and let us know what you think. You can leave comments in the link. I think Michael, can we make the slides available? Yep. That's great. We will have security audits, and we want to start the first iteration of this decentralized insurance market where we fund the excessive risk pool, the reinsurance risk pool. We will start this in March, and we plan to have very fast iterations. Yeah, so who of you is familiar with Maker Market? A few. So we are following their model. They have a nice model of basically every month they deploy a new contract and they cease the operation of the old contract, and so they can adjust to changes and bug fixes very nicely. And we are planning to do something similar with the reinsurance pool. We will integrate with Status. It's a mobile client for Ethereum, and it works really nice. And we plan to have a chat interface on Status. Yeah, that's our plans for Q1. Anything else? I think not. Then please, thank you so much for your attention. I think we have I have talked too much already. Let us know your questions, and please check if you want to join us on stage.
We have still the technical.
Of course. We have some more for the technical in mind.
Okay, while they're getting ready for a QA, thank you. Hence, I just want to mention we have an event on the 22nd. We have a partnership with Cardozo Law School. They're tech talks, so they're going to be talking about smart contracts, the legal implications. So that'll be our next event. And then from there, we'll be going to future events around the city. If you have any ideas or topics you'd like to see or want to share, just reach out to me, and I'd be happy to get you on the calendar. Go ahead.
Your questions?
This isn't so much as a question, but as a general comment. You guys said that it's very much mutual. You basically seem to just be the managers of the mutual that get a fee for the management of it.
For the benefit of the video, could you repeat the question?
Okay, I repeat how I understood it. You said you are asking if we are thinking on your mutual model also?
Yeah, I was just asking whether you do in fact see yourselves as the managers of the mutual.
Do we see ourselves as the managers of the mutual? Now you need to repeat it again.
Well, we have we see us as in different roles. We are firstly we are the initiators of such a contract. We deploy it and we manage the operation that it's available better than today. And so we are some kind of a service provider who enables people to participate in such a model. And of course we can take other roles, for example providing funds or even maybe we ourselves are a customer of such a model as a company, for example. So we understand decentralized insurance more than a protocol. It's not a company because we believe that blockchain is about decentralization, and decentralization means that there are no these big centralized elephants or incumbents which dominate the whole market and which always try to get all of it. Yeah? And we would want to establish a protocol which enables different participants to take roles in this model. Yeah? And maybe Etherisc is one of these companies which takes one of these roles, and we are somehow pacemakers. We understand ourselves as pacemakers. We demonstrate that it works, we develop the protocol, and we prove that it works with first implementations in different verticals. That's our role. So, but we want to be open. We want to create an open space where different companies provide different parts of the whole system. And so we provide an insurance ecosystem, and we hopefully there are many companies part of this insurance ecosystem, not only Etherisc. Yeah? We don't want to dominate the whole market. Yeah.
So I know you skipped the background slide, but what attracted you guys to the insurance space in the first place? And then I guess it's a two-part question. What is the reaction beyond intrigue that you're getting for some of these companies? Are they kind of nervous?
Well, I come from the banking sector, so I have a close relation to financials and risk management. And banking in the blockchain is not a very cool idea, because blockchain is banking basically. Yeah, it's payments and it's transfer of values and managing values. So you don't have to reinvent banking on the blockchain. But insurance is different. Insurance is risk chain, and this is something which we need in every economic ecosystem. So it's very attractive. Something so basically. To provide ideas for such a basic idea in the blockchain. So I think it's very attractive.
I think what makes insurance so attractive is if you think about insurance, it's basically a reallocation of funds. Yeah, so it's redistributing money from one party to another based on very simple rules. If this damage happens, pay out. If no damage happens, we keep the money. And the smart contract is perfectly suited to provide the very same functionality. So for me, I was in banking before and was in blockchain innovation with a large bank. And insurance was just a perfect use case, and nobody was working on it. So
there you go.
That's where the opportunity is.
Some words on the reactions of the...
Yes, reactions. Yes, actually that's one of my favorite questions. So we get a whole range of reactions. A lot of companies are very interested. Yeah, they want to understand. Yeah, so we see our role as some kind of educational towards companies. We try to charge for that, but it's not always possible. And there, of course, I mean, some just call us and say, what you are doing is illegal, it should be regulated, don't do it, yeah? Stop that. Yeah? And we said, well, it's a contract, I can't stop it. And it's interesting. Yeah?
Yes, I think ironically though, you're still, at least in the examples you gave, you're still facing the problem of validating that the event occurred outside of the blockchain.
Yes. So we rely on the data quality of third-party services. Yes. Does this answer your question? Or was it actually a question?
No, it's a longer question.
Yes. Yes.
But who's injecting that data into the contract? Because Ethereum can't call data someone has to put it into. That's what I was asking before.
Exactly. We can schedule calls. We use a service called Oraclize. Thomas Bertani and the Oraclize team are providing an interface where you can call any API, RESTful API out there.
So you're not going to be the centralized injector of data?
No, we can, for example, you could think of something like asking 3 different services and taking the majority vote. If you want to get rid of the dependency on one particular service.
It starts called Oracleize?
Yes, Oracleize. In the back.
Yeah, I was just wondering whether any airlines have actually reached out to you guys,
Yes.
expressing interest, maybe
Yes.
even partnerships.
Yes, very good question, thank you. We did not only get interest from insurance companies and reinsurance companies, but also from airlines, travel agencies, online travel portals, and airlines are interesting. Yeah? So basically, we can integrate this very seamlessly into a ticketing process. More questions?
Yeah. So like what you guys are providing is all about managing risks, right? Like so, but one thing that I think by participating in the contract is you're exposed to the risk of the Ether price, which you know it's
yes.
of course a risk. So have you guys thought about using something like a stable coin or something like that?
Yes, of course. So that's the natural evolution. But to be frank, at the moment, nobody on the street has Ether in his pockets. It's a service or it's a product for a very small part of the population. And as soon as we have stable coins or even better fiat-backed currencies, like Santander has announced that they want to integrate a fiat-backed coin into their online banking. So decentralized capital. Those services are the interesting ones, where we can have a bridge from fiat money to crypto money. Stable coins are interesting too, yeah, of course.
So is that a process of like integrating the token into the contract? So how does that like?
Yeah, basically you make your contract ERC20 token standard compatible, and then you don't pay your premium in Ether, but you pay it in, I don't know, Digix or whatever coin you want to use. Any token.
From the contract perspective, it's a little different between Ether and an ERC20 token. It's not very different to handle.
But wouldn't you have to keep track of the exchange rates and like?
No. We just if it's a stable token, we don't need to keep track of exchange rates.
But
and with Ether.
Sorry. So this is a problem that basically like every application on Ethereum today has, when you need to basically transact and not have to suffer that kind of market risk. So in general, cryptocurrencies today are really like crappy currencies. So we anticipate that to change. You don't need to. So basically, like if you can have the contract take in some kind of ERC20 type of token as payment, then at one point you could switch that out for something that's just stable. So maybe DGX, right? Digix Gold would be an example today.
But the ideal situation would be like all the capital, it doesn't matter what kind of token it is within one pool, and then like you would just take out whatever like the risk that you put in, right?
The ideal situation is where both the insureds and the investors transact in fiat. Something that they do today. You buy your car insurance, homeowners, it's in dollars, right? Mm-hmm. The same thing with investors. You invest on the exchange with dollars. So the ideal state is the fiat, but we're quite far from that.
Oh, ideal would be everybody's using crypto, and crypto is so stable.
So we disagree about the ideal state.
By 10 years.
I try to consolidate your views. I think in 10, 15 years from now, we will have very dynamic exchanges. So basically, it doesn't matter if you want to pay me in I don't know, GAF coins, and I only want to accept Berry coins. Then something in between us will do this exchange. Think of Shapeshift and those services. That's going in that direction.
Do you ever foresee being able to offer a parametric product in which a hurricane might be approaching the coast and you can offer real-time pricing for that risk?
Yes. We can do dynamic pricing very easily.
Ideally, we have a market of risks, which you can trade, like in an exchange. You have a risk token, we are thinking about providing different kind of risk tokens which are specific for a certain kind of risk, and then you can trade these tokens like any other, and the price of the token will correlate to the risk which is behind it.
Yeah, I mean, I only ask because we've seen, I mean, your risk pool might be limited towards how fast they can grow, but we've seen that even in the insurance and reinsurance market where in real time people say these prices are good until 5 p.m., the hurricane's coming up and you buy it.
Yeah, and that's where the protocol comes in, where anyone can create a risk transfer process for, let's say, a risk that is not present in the market. Let's say Asian typhoon or something in Japan. These are some of the developed markets. So you could build an insurance linked security to price and sell that risk, transfer it to investors, whether investors back the product before, and for insurers it's a different story. When they buy it, if there is enough backing of if there is enough money in the reinsurance pool, then you can obtain that coverage.
Yeah, I mean, I'm just saying because you'd be able to deal with very large value and insurers that were interested in purchasing it themselves as a balance sheet.
We still have some technical part, huh?
Okay.
Yes.
So
I'd like to have.
Are you guys you still want to see the technical part? We can go deeper into the current architecture and what we have prepared here. It's a look under the hood.
So, just not a long story, but just some insights in the development of our smart contract. I'll just start with the general overall architecture. We have a smart contract deployed on the Ethereum network, and this contract is completely autonomous. And as we told already, we communicate with this contract via MetaMask, this browser extension, or alternatively with Parity or Mist. And there is a simple in-browser solution here, which we provide by a small server. And this is what we have seen, this web page and these buttons and input fields. This communicates with MetaMask, MetaMask communicates with the smart contract, and the smart contract communicates with Oraclize. Oraclize is our interface to the real world. I forgot to add this in the graphic. Oraclize has a call to FlightStats. FlightStats is an American provider of flight data, and Oraclize not only puts the data in the blockchain, but also gives us a provable data, because Oraclize records the call to the SSL secured call, and records all the details of this call, so we can prove that we have called FlightStats at a certain moment, and that FlightStats has delivered a certain set of data, and it's not deniable because Oraclize provides us with a cryptographic proof of this call. So Oraclize has two functions: getting the data and providing the proof.
A question?
Yeah.
So does Oraclize prevent the non-deterministic problem? Does it mitigate that? The non-deterministic problem, so that you're not executing.
What is this problem?
So if you contract, is your contract executing once, or is it executing on multiple nodes? Or?
Yeah. Well, our contract, as always in the blockchain, in the Ethereum blockchain, there is always one who mines a block. And the node who mines the block is the block who decides at which time we ask the oracle. Yeah? And all other nodes just verify if this node has calculated correctly. But they do not do another call, but they just check if the node who has mined the block, who has won the block, has done it correctly. Yeah? And this is a simple blockchain verification process. But it's always one node who does the concrete call to Oraclize. And Oraclize records it, generates a cryptographic proof, so everything is recorded on the blockchain. this was the situation in August, September, and we had one contract, and we got close to the block gas limit for deployment. The deployment of this contract cost 4.7 million gas. So this was exactly the block gas limit, so we just got it on the blockchain.
We had to strip out some nice features to do that.
Exactly, but we got it on the blockchain and everything was nice. But then, after Devcon, or on Devcon, the attacks on Ethereum began, and the block gas limit dramatically decreased on 1 million at some point, and so we were not able to deploy another version of this contract to the blockchain. And we were thinking how to cope with that, and we decided such situation may arise again, and there may be other attacks, and the block gas limit is not guaranteed. Yeah, we can say we can guarantee, I think, 1 million, 2 million gas at a sustainable level, but we can guarantee 4.7 million gas. So we had to do something, and our solution was to modularize the contract. From one contract we moved to a system of 7 contracts which interact together, and the maximum deployment amount is 3 million gas. So actually we can deploy this again on mainnet today, and we have no problem, and we are still working on reducing the size of one contract to go under 2 million gas. I think under 2 million gas is quite safe under all circumstances, and then we can always deploy new versions of the contract. So how did we do that? The modularization of contracts is not only because of block gas limits, but it's also maintainability and security for 2 reasons. Maintainability: if I detect that some part of the system has bugs or has features which are not, which have to be changed, this can also be regulatory changes or something like that, then I need a system where I can exchange parts of the whole system independent of other parts. So modularization is a must. We can't do it. We can't do production system without modularization. And the second, security. We need a system where the part of the contract which holds the funds is so simple as possible. And so we have a maximum small attack surface. And we did this by separating this in 7 contracts. We have a so-called controller contract. This has no active function, but it's for deployment, that we can guarantee that all these contracts are deployed in a consistent fashion. So every contract, first we deploy the controller contract, then we deploy the other parts, and every contract is deployed afterwards registers itself in this controller contract. So we can be sure that the right people have deployed the right versions of the contract. And the active parts are the 6 contracts above. We have a database which holds all of the data. It's also very important that we have one point where we collect all the data. Then we have access control. We have to ensure that the different functions of these contracts are called only from the contract which has the permission to do so. And we have this orange contract which holds all the funds and which does some simple bookkeeping on these funds. And the business process is above. This is 3 contracts. We have a new policy. Underwrite calls the oracle, checks if the data is correct, and accepts or declines the policy. And then payout contract checks if the claim is there and does the payout, but not itself, but it sends a message to the ledger contract, and the ledger contract then pays the money in the same way. So we have only one piece of code which does the payout. So very secure and very simple. Okay, that's the overall structure, and what we are doing in the future. We will standardize the relationships between the contracts. So we have some kind of universal plug-in system like Google browser extension or something like that. We will standardize the state model, so we have a consistent model of the internal states of the contract, and this will enable us to implement a whole business process engine. So we can even change the processes without exchanging the contracts. The processor will be in some kind of structured data, and we can plug in the process, and then we can have different processes with the same contracts. Of course, we do security audits, bug bounties when we go productive. And the last thing, one more, we have just now implemented Newport. As said, we have in the old contract we did not have any identity solutions, but we are now working with Newport, and now we can do login in our contract without having login data ourselves on our servers. And I'll just show you how this works. And we have implemented it as a very simple subset of our flight delay contract. You see here the same screen. I select again. Just have to look what. Okay, we start at JFK and we go to San Francisco. This is a sole flight which you can do here, and we start tomorrow. And then we can select here one of these flights and put some Ether in it. And but the most important thing I forgot, before I can apply for this policy in this new model, I have to connect to the contract. And I connect to the contract simple with my Newport identity. Click on connect, and then I scan this QR code. I just put it from my handy. So Newport has a mobile app, and this mobile app basically is a QR code scanner. And as soon as I scan this QR code with this application, then Newport checks the QR code and connects to the server, and then asks me with my mobile app if I want to share my credentials, my personal information with this contract. I hope this works now. Now I get the message from Newport. Somebody wants to share that I share my credentials with the contract. I accept this, and some seconds later the application sends a token to our contract, and now you see my picture and my name under it. So I'm logged in. But the interesting point, we as Etherisc, we don't have this data. Only the browser and the interface has the data. For the moment I apply for the policy, and afterwards everything is away. So I keep the ownership of my data in the whole process, and we as Etherisc, we never have personal data of anybody who uses our system. And this is quite different to all existing solutions, and now I can apply. And now, same thing, I don't use MetaMask, which made our problems some minutes ago, but I get a QR code again. And in this QR code, the whole call of the contract with this new policy is contained, and I can even scan it here. And now I get again a question of Newport: are you willing to send to Ether to this contract? And I accept, approve this. I use my fingerprint, and now the transaction is mined. Hopefully we see it some seconds afterwards here.
Is anyone here from the Newport team?
Ah, nice.
Great.
I think we're one of the first applications of this.
Yeah.
So transaction is already mined. So here you see the transaction hash, and now we can click on this hash and we see the whole transaction, which is itself interesting because NPC, our Telegram bot, watches the contract and sees, oh, there is another policy mined, and you can see here on the testnet.
Again, it takes a bit of time. Yeah, so demoing blockchain applications is
the testnet is quite slow, but here we are. Yes. And interesting, now we are. I'm transferring first some Ether to my Uport contract. The Uport contract then sends the money to our flight delay contract, and this does the processing of the policy. And you see it afterward, I think. Yeah, you see first the Uport contract transfers the 2 Ether to our contract, and then everything is done. So I think this is the future, that we have a login system which keeps your data on your mobile phone secured, and we never have the necessity to have personal data of our customers on our servers. And I think this is quite an advantage.
So the next step is now to have the claim of the airline asserted that this user has a ticket for this particular flight. And that's so if I understand it correctly, that's possible with Uport. Please correct me if I'm wrong.
There's a question.
Yes,
Is that
question.
main goal of the integration, because you're going to start verifying that the person actually has a flight, as opposed
Yes.
to now you said it's like a gambling?
Yes, exactly. Yeah. Exactly. As soon as we check for the ownership of the ticket, it becomes an insurance, because then there is insurable risk. Insurable interest, that's the...
Uport has this feature that you can add claims to your identity. For example, you could add your ticket number to the Uport identity, and then we can ask for this data, and then you can verify it. And so we can have a complete closed circuit of data, and which is not, you can manipulate it. Yeah? So, next steps.
I was wondering, I mean, it seemed like the crop insurance was more concept, but the claims adjudication piece I think would be tricky, so I'm wondering if this is kind of a direct, going in that direction in terms of how you're going to solve that problem.
Yeah.
What was the question?
Okay, so I guess the question is,
claims management.
Yeah, I mean, this is just black and white, right? So like the crops issue, right? So you'd have to have someone verify it or take some sort of picture or something, right? And it seemed like it'd be a tough process to automate. So I'm just wondering, this is kind of...
Well, if you are going to a non-parametric in verticals, then we have to deal with this. How do we do claims management in a decentralized way? We have several ideas on it. One idea is let the customers do it. There are already examples, so-called peer-to-peer insurance, where people form groups, and the group of people, which is normally quite small, maybe 15 people, 20 people, and they do claims management under itself. And they have an interest to avoid fraud, because it's their money. Yeah? So. But I think it's not an easy task to implement such a governance structure in a peer-to-peer insurance, so we postponed it, and we will start with a parametric case because it's much more easier to handle. But of course, such a mutual or peer-to-peer approach is the holy grail of insurance, basically, in a decentralized fashion. And we hopefully reach this stage maybe in 1, 2, 3 years. But it's for sure it's not the first step.
Hi, I'm on a chat group, and a gentleman just asked, do you have a Slack or anywhere to generally chat with you guys? Because he was wondering if there was one on your website.
What is the best one?
GitHub. I think
so I think we will make the slides available on the GitHub.
Slack. Like
no, we use GitHub. Jitter. GITTER.
Okay. Well,
.com/Etherisc.
Okay. I'll write that that down. And then also just a side, you guys should have an email sign up on your website.
It is contact@Etherisc.com.
No, I'm sorry, like a newsletter.
Yes, okay. Yeah, I hear you. Thank you.
Is the pricing dynamic where if the losses start rising a little bit more than you thought, it alters the pricing, or do you have to go in and alter pricing yourselves based on the...
No, the pricing, the user selects how much the premium is in a certain range, 1 to 5 Ether, and what is dynamic is the payout ratio. So how much you would get back in the case of a flight delay. That's dynamic, and that depends on the historic data. So if a flight becomes more and more delayed because of some reasons, the payout ratio will go down.
Right, but do you ever find that it's continually underestimating what it should be, and that needs to be changed?
Yeah. Well, risk management is always some kind of self-learning system. Yeah, it's in banking the same as in classical insurance. You always make historical validations of your models, and then you adjust your models according to historical data.
So you're adjusting the model.
Yes, exactly. We are not reinventing mathematics. Yeah, and insurance is about mathematics, and this is all very well explored, and we just adopt these methods to our blockchain. The difference is here that it's done autonomically by a piece of software which has control on funds. So this is different. Yeah.
What's the expected loss on a given contract for flight delays, for example? The expected loss.
Expected loss, yeah, we have seen it. It depends on the flight. And in case of this flight, we had 17%, so the expected loss is 17%. It's
I mean, for if I were to buy like 1,000 random insurance policies, what's the?
Well, this is we try to reach the Solvency II, which is 99.5%. But we can do better because we have much lower costs, and we can adjust this level as we like. If we do the level too high, for example 99.99%, then the capital is quite ineffective, yeah, because you need so much money to cover such a high degree of safety. Somewhere between Solvency II and 100% is the solution, I think.
Does this answer your question?
Sort of. I'll ask later because there's a
okay.
part to it.
In the back we have two more.
Isn't the expected loss just what the fee you guys anticipate to take from the contracts? So like, Lemonade, you said it was 20%. In this case, it was 3%. So wouldn't that be sort of the expected loss or the slippage on
more of like the
all the money that goes into the system?
I'm thinking more of like the worst type buffer.
I think we are trying to give more of the money to the customers. We spend less money, so more is left for the customers. It's very simple. And but the risk model is the same. We just we have a little more less costs, and so there's more money left for the claims.
Just to his example, so if I paid him $100, would I expect to, over time, receive $99 back, or say $60?
Well, one example: you pay $100, and 100,000 customers pay $100. Yeah? So we take 3-5% for our operational costs. The rest is left for the covering of the claims. So it's divided, and it's just a question of statistics, how much you get, basically.
So the sum of all premiums is 100%, and the sum of all payouts would be 97%.
But there are temporal changes. This would be valid if we had infinite time, yeah? But we have not infinite time, but we have every year we have to go to our investors and show them our balance sheet. So there are some years where we have more claims and some years we have less claims. And this fluctuation of claims, this we cover via a reinsurance or a reinsurance model or something like that. Because maybe there is one year we have double the claims than the last year, because statistics only valid on the long term. Yeah.
Is there a thought for like distribution or how you're going to sell some of these policies, or is that just kind of, you know, let that problem solve itself?
So this is your
very good question. Thank you. So this is of course the demo is from a consumer perspective, yes. But in fact we are not that interested in covering a B2C market or doing a marketing campaign or something. But the much more interesting model from a business perspective is B2B. And basically partnering up with large operations which already have customers, you know, so like airlines, travel agencies, travel portals. There are travel service providers which now do, if you buy a ticket today, after the actual ticket buy you get these nice checkboxes. Do you want additional travel insurance? Do you want to cover your cable CO2.
They tell you about that after you cancel.
Yes, exactly. And then we could become one of those checkboxes, or you could even price it in. You know, so there are a lot of options, and in our experience, stay tuned. We might come to such, but we are talking to many people. It's interesting, yeah. The B2B market is much more interesting for us because you just get the scale much quicker.
And the money.
Okay, I think that was it. Thanks a lot for your attention. It was great being here. Thanks a lot.